I think we're very fond of like the two-part question. Or the
I think on the financial inclusion side, I think we have now put in an architecture which addresses some of these things, because now the Aadhaar number is also a sufficient know your customer to open a bank account. So anyone who gets an Aadhaar number can get a bank account. In addition, we have provided a service called an electronic know your customer. What that means is that if you go to a place where you can get a bank account and use the Aadhaar online authentication, which says yes or no that this person is the same guy, you can then authorize the UID to release your know your customer details to the bank. So it's a resident authorized know your customer. And then that goes to the bank's computer system and your bank account gets opened. So you can do this instantaneously in real time without paper. So now you have a friction-free, electronic, real-time, paperless, instant bank account opening capability. And once you have that, and once the bank authorizes someone to operate that, then any agent can open a bank account for you. So in theory, I can have 1 million agents across the country, all who have a mobile device, and they can open a bank account electronically in real time. So the moment you create that level of capability, then you reduce all friction to onboarding people into the system. So that's one friction point. So that gets eliminated. The second point is having access to the money. So this very same agent with this small device, which we call as a micro ATM, can also be a point where you can withdraw cash from your bank account. And that's what we're rolling out now. So that you go to this agent, you authenticate yourself, you say, I want 500 rupees. The agent gives 500 rupees from his drawer, and on the system, the agent gets credited 500, and the guy who withdrew the money gets debited 500. In an interoperable network across banks. So I could have my account in State Bank of India, the agent could be Union Bank. So this interoperable network means that I can now have any location in the country to withdraw my money from. So instead of going 40 kilometers to the bank branch, I can go 400 meters to the grocery store and withdraw my money. So both account opening and money withdrawal has now been completely streamlined. So now you have the raw material for inclusion. What the direct benefit transfer does is it provides the impetus for this, because if more and more people get money into their bank accounts using the system, especially in villages, then there is a reason for having a withdrawal point. So it drives the rollout of the network. And another thing the government is doing is that for these kind of what are called as business correspondent transactions, they have proposed a last mile transaction fee, which then allows the agent's economics to work. So there's an agent in the village, and every time he withdraws 1,000 rupees, if he gets 1 or 2%, then that gives him the justification to be in the business of essentially dispensing cash. So I think once all these ecosystem rules are defined, and then you start putting more and more of the DVD money through this, then automatically the rollout happens. And once the rollout happens, financial inclusion happens. So then it becomes a byproduct of this. In terms of the actual plans, the government has rolled out 26 schemes in 43 districts and has now taken up another 81 districts, so a total of 121 districts. I think 78 plus 43, 121. And it's also taken up LPG subsidies, which is a big part. And they also take up pensions, which is rural pensions, and also they will start looking at NREGA employment guarantees. So as to when, how much will get covered, I can't say. But the strategy is to look at all flows and put them through this pipe.